Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update as of 6/8/2022. We're also going to be talking about mortgage demand, how this has actually been the lowest level in 22 years. Better.com, they're being sued by a former executive. That kind of sucks. Right before their SPAC, we're going to talk about what a SPAC is, IPO, and then we're going to go ahead and go on with Target. Target is cutting their prices. They're trying to get rid of all their excess inventory and why they're doing this and what they're transitioning to. And also Jamie Dimon. Jamie Dimon is the CEO of JP Morgan Chase. We're going to see exactly what he said as far as the current market is and where he thinks it's actually going to go. But let's get on with the mortgage rate update first. We're going to be pricing out 5 different mortgaging products. It's going to be a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. And if you don't know what a 5/1 adjustable rate mortgage is by now, it is interest only fixed for 5 years. Then it gets adjusted every single year according to the rate and the cap on your product. Now, 30-year fixed will be sitting at 5.49%. That is 0.01% increase from 1 day ago, 0.02% increase from 1 week ago, 0.15% better pricing than 1 month ago, and 2.39% increase from 1 year ago. 15-year fix will be sitting at 4.83%. That is 0.01% increase from 1 day ago, 0.01% increase from 1 week ago, 0.08% better pricing than 1 month ago, and 2.33% increase in pricing from 1 year ago. 30-year FHA will be sitting at 4.83%. That is 0.01% increase from 1 day ago, 0.03% increase from 1 week ago, 0.37% better pricing than 1 month ago, and 2.23% increase in pricing from 1 year ago. 30-year jumbo will be sitting at 4.73%. That is no change from yesterday, 0.02% increase from 1 week ago, 0.02% better pricing than 1 month ago, and 1.6% increase from 1 year ago. 5/1 adjustable rate mortgage will be sitting at 4.62%. That is no change from yesterday, 0.14% increase from 1 week ago, 0.06% better pricing than 1 month ago, and 2.37% increase in pricing from 1 year ago. So first, let's go ahead and start with Jamie Dimon, which is the JP Morgan Chase CEO, and let's go ahead and see what he actually has to say about the current market that we're in and what he's afraid of. He's actually talking about there's going to be a hurricane on the horizon. Now, we're all anticipating something very dramatic to happen through QE and QC, which is quantitative easing and quantitative tightening. But let's go ahead and see what he has to say.
Now, and you mentioned storm clouds.
Yeah, I'm going to change the storm clouds because I said there are 3 things that we're going through, which are, I hate the word unprecedented, which are kind of unprecedented. And you got to put this in the back of your mind when you've seen things that have never happened before, then you have to question your ability to predict. Okay, one is huge growth in this country, driven by fiscal and monetary stimulation. That isn't a normal recovery, okay? And that fiscal stimulation is still in the pocketbooks of consumers. They're spending it at very strong levels. And the data is completely distorted. It's distorted by inflation. It's distorted by, they went from goods back to services. It's distorted by all these things, but jobs are plentiful, wages are going up, consumers are spending, the lower income folks, not quite as much as before, but everybody else, it looks like they have $2 trillion more, savings rate drop. I don't think that's going to stop their spending in 6 or 9 months. And so that to me is the bright clouds out there. But it's different. The Fed has to meet this now with raising rates and QT. And the new part of this isn't the raising rates, it's the QT. The QT we've never had QE before like this. Therefore, we've never had QT like this. So you're looking at something they're going to be writing history books on for 50 years. What was QE? What worked? What didn't work? I think a lot of parts of QE backfired. I think the negative rates was probably a huge mistake for a whole bunch of different reasons I won't bore you with now. But they got to raise rates, and in my view, they have to do QT. They do not have a choice because there's so much liquidity in the system. They have to remove some of the liquidity to stop the speculation, to reduce home prices, stuff like that. And you've never been through QT. So all the major buyers, if you go back to 2010 and say, who are all the major buyers of treasuries? All that time, it was central banks, foreign exchange managers, banks who were topping up their liquidity profiles because we had to for regulations. All 3, it won't happen the go round. Banks are topped up, foreign exchange managers are topped up, the central bank will be selling, not buying, and governments have much more fiscal deficit to finance. That's a huge change in the flow of funds around the world. I don't know what the effect of that is. I'm prepared for, I tell about minimum huge volatility. And the third thing is Ukraine. That you've not had a European land war since 1945. Okay, and the complexity of Ukraine is we don't know the outcome. I always make a list, if you predict the outcome. Well, you couldn't predict the outcome of Vietnam, Korea, Afghanistan, Iraq, 10 other conflagrations. All wrong. Wars go bad. They go south, they have unintended consequences. And this happens to be roiling the commodity markets of the world. Wheat, oil, gas, and stuff like that, which in my view will continue. We're not taking the proper actions to protect Europe from what's going to happen in oil in the short run, and we're not taking the proper actions to protect you all what's going to happen to oil in the next 5 years, which means it almost has to go up the price. We're not investing enough money, to keep oil a number. And for all those who love climate change, if oil prices go to 175 or 150, which I kind of think is in the cards to tell you the truth, not in the immediate run, but down the road, then CO2 won't go up, down, which is everyone predicts because people buy less oil and gas. It's going to go up because all those other countries out there, the poor countries who need oil and gas to feed and heat their citizens, will not buy oil and gas, they'll buy coal. That's what's going to happen. CO2 will go up, it won't come down. And we're not dealing with these challenges. So those three things, fiscally induced growth, QT, Ukraine war. So I'm going to change the storm clouds out there because I'm an optimist. I said there's storm clouds, they're big storm clouds. It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy Sandy or Andrew or something like that. And you better brace yourself. So JP Morgan's bracing ourselves, and we're going to be very conservative in our balance sheet on, with all this capital uncertainty, we're going to have to take actions. And I kind of want to shed non-operating deposits again, which we can do in size, to protect ourselves so we can serve clients in bad times. And so that's the environment we're dealing with. And I think it's okay to hope that'll end up okay. I hope it. That's my Goldilocks. I hope. Who the hell knows?
Now, just so you know what he's talking about when he's talking about QT and QE, okay? QT just means quantitative tightening and QE means quantitative easing. So quantitative easing just means that what they're doing is what we've done in the past 2 years is Feds have lowered interest rates so much to go ahead and stimulate the economy and make sure that it doesn't go into like the complete shit. Then what we have is quantitative tightening where they're actually decreasing the amount of bonds that they're trying to buy. They're not buying anymore. There's no more money being stimulated into the economy, which, as everybody knows, there's no more pandemic unemployment. There's no more of low interest rates. As you can see, the interest rates have completely increased to crazy levels. So in the quantitative tightening, what happens is they're trying to counter hyperinflation, okay? They're trying to counter hyperinflation. Now, he's made a lot of good points as far as, the Ukraine. He's talking about, they're trying to go ahead and lower their balance sheet and make sure that they're not so exposed, because this was also a man that previously he stated, when the whole mortgage housing crisis happened in 2008, he was on board. He was just like, listen, everything is fine. Everything is good to go. Everything, don't worry about it. Well, this is very, very odd for one man in such a high position, because this doesn't happen, right? This is not something that is a norm. This is not something that a man of his stature goes ahead and says that, this is kind of like a shit show. This is not doing too well. We're kind of like in a really bad position. So he's anticipating that we're actually going to be in a really, really bad time. Now, this is not going to be something that's going to be right away. This is going to be something that's going to be probably in the next 12 to 18 months, which we're going to kind of see exactly what's going on, because if you look at any of my other videos, you will go ahead and see that everything is correlated with one another. It's not housing is one side and then the stock market is one thing and businesses are doing another thing. Well, we're kind of like in a shitty situation because stock market reflects everything with real estate. Real estate market, everything with the stock market. Now, what do I mean by that? Now, before, back in the crash of 2008, what happened is that when you buy a mortgage, right? When you buy a mortgage, it gets traded into the secondary market, which is going to be your stock market. This is known as an MBS, or a mortgage-backed security. These are known as bonds, as debts. Now, whether you're going to do a call or a put on it, whether it's a call, which you think it's going to raise, or a put, which means that, you know, you're trading at a lower value. These are option trading. Right now, we're not doing too hot. So, I mean, maybe the guys, is he really anticipating that we're going to go into like a really bad like recession? Now, of course, that's the $1 million question. Nobody knows. But for a man like that to go ahead and say something like that, it's really, really unsettling. And he's also right about the whole entire, you know, the gas that we're trying to go ahead and go into a zero emission area. Now, what are third world countries going to do? Are they actually going to go into the realm of going into burning coal? Because everybody can't be like America. Everybody can't be like the United Kingdom. Everybody can't be like Canada. Everybody can't be like these first world countries that, you know, everything is okay for the most part, right? We do have our downsides as far as economy goes, and people trying, you know, people homelessness and all this other stuff. But yeah, it sucks. But let's get on with the next thing, is mortgage rates. Okay, so mortgage rates has actually hit a 22-year low. Now, mortgage rates are, you know, up, which in turn goes ahead and slows down everything. But mortgage rates are back on the upswing after a brief decline in May, and the housing market is still suffering. There, you know, we are kind of in a really, really crappy position, and I'm gonna go ahead and tell you, we have lost probably 80% total business as of right now, and it sucks. As a result of mortgage demand continues to drop, total mortgage applications volume fell 6.5% last week compared with the previous week. According to the Mortgage Bankers Association seasonally adjusted index, demand hits the lowest level in over 22 years. That is in 2000, and that's 2000. These are mortgage applications after everybody remembers that whole Y2K fiasco where everybody thought that everything was going to go to shit, and we took a little bit of a dive. The economy kind of went into the bad, but everything on the housing market was still good. The average contract interest rate for a 30-year fixed rate mortgage with conforming loan balances of $647,200 or less increased to about 5.4%, between 5.4 and 5.5%, somewhere around there, from the 5.33%, with points rising 0.6% from 0.51%. Which is, you know, it's getting up there, including origination fees for loans with 20% down. Now, everybody knows mortgaging and real estate, it's just, everything is going to be a catch-up game to go ahead and get back into the world of real estate that we were at before. But where is it going to go? I will tell you firsthand, we are anticipating, you know, we're putting our eggs in the basket of actually, you know, waiting until how foreclosures and short sales go, because, you know, this is just a world where I've been doing this now for 20 years, and in 20 years business, you know what's about to follow something that, you know, is happening right now. Now, one of the big things that we're kind of following very, very close is something that is still on a subprime market. The subprime market is something that exposes majority of banks on their portfolio loans. A portfolio loan is something that doesn't get sold in the secondary market, which they hold. And that is something called a home equity line of credit. Home equity line of credits have something that's called a draw period. Your draw period is the money that you're allowed to go out and take out for the first 10 years. Then after your 10 years comes up, then it goes to an adjustable rate mortgage shortly after that. So your $400,000 or $500,000 that you go out and pull out, you know, typically it's actually about $150,000 to $200,000. Here in California, it's much, much more higher. When you get to that adjustment, that means that the 2.5% to 3% that you were actually paying on that draw period, now it's going to go into the 5.5% to 6%. We're projecting interest rates to go all the way into the 7% range. It's going to be quite a sticker shock. It's going to suck. It's going to be, and it's a sticker shock for everything, you know, every single thing that we've had so far, because the Fed's completely screwed everybody right now. And we're all just, you know, in this really, really whirlwind of you know, gas prices being so high. Food is going to start increasing. The cost of all goods are going to start increasing, because what happens is you have to go ahead and transport all those goods to the retailers. The retailers where we go to, their supermarkets, our food places, and everything like that, they're all going to go ahead and increase. So Next, we're going to go ahead and go and talk to Better.com. So there's a former executive. She was part of the customer service and retention area. One of Better.com's former executives has filed a lawsuit against the online mortgage lender, alleging that the company and the CEO, Vishal Garg, and most of you guys actually, I mean, if you don't know, you know now, that this is the guy that went ahead and, axed 900 employees, via Zoom call. He said, you know what? 900 of you guys get the hell out. He stepped down, blah, 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 everything like that. So he misled investors when attempting to go public via a SPAC. Now, what's a SPAC versus an IPO? A SPAC is a special purpose acquisition company. So what does that mean? That just means that in order for you to go public, you don't have to go through the simple routines that was usually on an IPO, which is an initial public offering. You don't have to really do that. You kind of get to skip a lot of those steps. Sarah Pierce served as executive vice president of the customer experience, sales, and operations at Better.com. Which she went ahead and, they whatever happened, whether she was let go or she left voluntarily, we don't know. They parted ways with the company this year. In the lawsuit that was filed today, according to the Wall Street Journal, Pierce alleges that Better.com misrepresented its business and prospects so that it could move forward with a SPAC that would have given the company a post-money equity valuation approximately at about $7.7 billion. The SPAC, of course, was delayed and has not taken place yet, whenever you have stuff like this happens, the SPAC is not going to go ahead and take into it's just not going to do it. It takes investors to go ahead and back the company, and if something happens where there's lawsuits and there's stuff that's saying that it's overvaluated, it's just not going to happen. At the time of her departure, though, in February, TechCrunch reported that according to sources familiar with internal happenings at the company, Pierce had tried to stand up for hundreds of her employees who the company laid off in December after the CEO publicly described them as lazy and non-productive. Well, I mean, if you're non-productive and lazy and you're not paying your people enough, that's why. Because if you're doing a mortgage and you're paying them $100 to $200 per file, of course, they're not going to do shit. They're just going to go they're going to run the mill. That's why it's really important to pay the people what they deserve. Whenever you're low-valued employees getting low-valued compensation will give you, in turn, low-value work. They're not going to bust their ass and go ahead and work their asses off for you if you're not paying them what they deserve. And I promise you, this goes across the board. You could go through any place. There's a difference between what Target pays their employees versus what Walmart pays their employees. Target, that place is like crack cocaine. You go in there for like one thing, next thing you know, people are so nice and everything is so like great that you want to go ahead and buy a bunch of things. You go in there for like a gallon of milk and next thing you know, you're left there with a $250 tab and you're like, what the hell just happened? I'm a Walmart guy. I love Walmart. I love you, Walmart. Please don't hold this against me, but it just is what it is. You guys don't pay your people as much as Target does. These are just facts. I'm just a big fan of the Walmart game, but Target, there's something in there. I could go to Walmart and I could buy exactly what I want and then I could just dip out of there. Target, on the other hand, not the same thing, which we're going to go ahead and segue into what Target is actually going to go doing. But let's go ahead and get on with this. According to the S4 filed by Aurora Acquisition Corporation, the entity Better.com was to merge with Pierce, who earned $856,000 last year, got $1 million in a bonus, and was awarded $17.37 million in stock options, which majority of people, whenever you get to a certain level of executive level at any company, you get something that's called, RSUs, or you get stock options or whatever it is. And this is just to go ahead and entice you to get a good quality candidate to go ahead and keep working at a higher rate. So like, let's say for instance, when Facebook got sold, right? When Facebook got sold, or not Facebook, so I apologize, not Facebook. When Instagram got bought out, Instagram sold, it wasn't $1 billion right out the gate. They sold some of it in stock options, some of them was in cash, some of it was in, however they structured it. I have to go back into my notes and see exactly what it was, but it doesn't go that way. Now, when you get to an executive level in any position, it's the same thing. You get stock options. This fucking crow is killing me right now. I want to shoot it with a BB gun. I hate crows. Son of a bitch, this thing is so annoying. Sorry about that. The company has continued to make headlines numerous times over the past 6 months. On December 1st, Better.com laid off 900 employees via Zoom call, which we already said, but enough of that stupid company. I'm done with that company. It's just, I don't know why people treat other people so bad. Like, why do you treat them like, you know, like they're just like a nothing, right? They're just like, in my mind, I could not rationalize why somebody would think that the way that you let somebody go would be like that. There's no humanity in it at all. I don't get it. I know I curse a lot. I know I think, but I am always for the people. That's why I always state these exact things that I go ahead and state. I offer up to 50% commission rebate. I offer 0% listing on homes. I go ahead and offer mortgage products like 100% financing and all these other things because I care about the people. If we make a small profit, I don't care about money. I don't give a shit about money. I had money before. I had a lot of money. I made a lot of money. I've lost a lot of money. Money means nothing, but it's what you could go ahead and progressively do as you get older to go ahead and make a little bit of impact. That's why I do what I do, because I care about people. You know, that's people. We're all gonna end up dying after here, but what do you want to be remembered as? Whatever. But let's go ahead and talk about what Target is doing. Target is actually cutting prices to get rid of their excess inventory, so they're gonna just start dumping up a bunch of stuff. You want to know why they're doing that? Because they're anticipating everybody to go ahead and get into the world of back to the office. So the Minneapolis-based retailer is taking a set of actions to right-size its inventory for the balance of the year to create additional flexibility to focus on guests in a rapidly changing environment. A news release said those actions include canceling orders from suppliers, including from home goods and clothing, and cutting prices to clear out inventory. So why are they actually doing this? This move is an example of what retailers are doing in the wake of inflation and changing consumer habits as shoppers return to pre-pandemic routines, which means you're gonna go back to the office, you're gonna go ahead and, you know, you're not buying, you know, the sweatpants and shirts that you're sitting in your office desk and then you're just, you know, like what I'm kind of wearing right now instead of like a suit and a tie and everything like that. So seeking out dressier clothes and services as opposed to the casual clothes at home goods that boosted Target sales during the COVID-19 pandemic. Target business continues to generate healthy increases in traffic and sales despite sustained and volatility in the macro environment, including shifting customers' buying powers and rapidly changing operation conditions. Now, we're all going to start going back to work. A lot of people do. I highly doubt the majority of people are going to be going back. I think most people are actually seeing the benefits of being at home working, being in traffic all day, an hour. It just doesn't seem productive, okay? So when you wake up and you're out and about and you're like, you know, you have to wake up, you have to get showered, dressed, everything like that, then you have to go sit in that godforsaken, especially here in Southern California, on that 405 freeway or the 5 freeway or the 101 freeway, 134 freeway, any one of those freeways, they're all shit. It sucks. And to sit there, you just want to, bam, shoot yourself in the head because it sucks that bad. But that's going to be the mortgage rate update. Target is probably going to have a bunch of sales, so the credit card statement that my wife is about to pull in is going to probably be brutal, but it is what it is. For up to 50% commission rebate, 0% listing on selling your current home or any mortgaging assistance. Link in the description below. Stupid crows and these damn flies. I don't know why the hell. Whenever you're buying a new development, just remember, you're going to get a bunch of these little critters that are all going to be around for a while until, you know, they're done developing, especially in an area like mine or any new development that it's just annoying. It's annoying. God help us all. Till next video, peace.
I don't wanna waste a minute. Don't know when the plans swing it. If you got a glass, fill it. Cause I need it now. Money is a in it. I don't wanna think about it. So if you know the song, sing it. Cause I need it now. Take me to a place where the music's loud. I don't wanna think right now. Flashing lights running through the crowd. I don't ever wanna stop. So let's get out. Let's get out. I got money in my pocket and I'm about to f***ing drop it with you now. With you now. Tear the roof off everybody. If you got a glass, fill it, cause I need it now. Money is a in it, I don't wanna think about it.